Let's discuss more on the impact with regard to this lower APM allocation to the gas distribution companies. We have Sumit Pokharna, the Vice President, Fundamental Research at Kotak Securities, who joins in. Hi, Sumit. Good morning, and thanks a lot for joining in. Well, how does the news flow compare with what you were factoring in? Lower allocation, they'll have to source gas now at a premium of around 20 to around 30%. Your reading?
Yeah, thanks for a very good morning to all the viewers. Definitely, the domestic gas supply or particularly APM gas supply is reducing, and around 3 MMSCMD of gas of ONGC has been nominated as a new well gas. So from APM gas, so that means that much pricing will increase. Particularly if I talk what was happening, the APM gas is priced as $6.75 per MMBTU. However, new well gas is linked with crude oil price, which is 12% of the crude oil price. So the gas supply from APM to new well gas, and that will be supplied to city gas distribution companies. So this is a new normal according to us. You will see further cuts going forward from the APM to and moving to new well gas. So these companies have to adjust with the new gas allocation, and at the same time they need to increase the price. As per our calculation, they need to increase the price by 1 rupee 50 paisa to 2 rupees per kg for CNG. Going forward, given the threat from EVs plus the Delhi policy, EV policy which has come, we believe it will be difficult for these companies to maintain these high margins, and they will. That's why we have been negative on city gas distribution companies, particularly IGL and MGL, who has got a higher weightage in this segment on the APM side. So we have been negative for last more than 1 year, and we have been recommending investors to move away from these two companies.
Okay, get your sense of caution, Sumit. What is the kind of margin hit that you're right now penciling in because of this lower share of APM? And then, like you're saying, they've not taken commensurate price hikes to offset the impact of the more costly gas that they're getting. So what's the margin hit for, say, an IGL or an MGL in FY26?
Yeah, so we believe if they can pass on the burden of this by 1 rupee 50 paisa to 2 rupees, they will be margin neutral. So we need to wait and watch how this happens, because there are political compulsions, there are EV threats, and there is a substitute product, petrol, diesel. So if you are increased price too much, then obviously the conversion rate of from liquid fuel to gaseous fuel like CNG will happen at a lower pace. So we need to wait and watch how does that pan out. But if they do a price hike of 1 rupee 50 paisa to 2 rupees, they will be good enough.
Wow, okay, 1.5 rupees to 2 rupees of a price hike will mitigate the impact. Got that. So let's see if the companies take that kind of a price hike or not. That's one part of it. And secondly, just to get an idea of the change in the feedstock now that they have to take gas from a lot of the newer wells, what is the blended increase in the cost of gas for these companies?
So that will depend on each company, because everybody has a different set of mixture. Gujarat Gas has got more industrial weightage, and they are dependent on more on international gas prices. However, MGL and IGL has got more domestic gas allocation, because their weightage more towards CNG and PNG, domestic, rather than industrial side. So it depends on which company we are talking about. Definitely, if you look at the substitute product, which is naphtha for Gujarat Gas, how the prices are trading there, they can still pass on the burden to the industrial consumers. Yeah.
Yeah. So, but IGL and MGL, you're saying that for MGL and IGL, the actual increase in their feedstock cost in the overall gas prices will be a little lower than for Gujarat Gas. Any rough estimates for MGL? Say, how much does the cost of gas increase by?
No, what I'm trying to say is Gujarat Gas has got more industrial volumes as compared to MGL and
IGL, yes.
Yeah. So they are less immune as compared to with this new policy change which has come. So it all depends how they will increase the prices, and they can pass on the burden to the end consumers.
Okay, so basically you're saying stay away from all three, right? Avoiding all the...
So, as I mentioned, being a B2B, it is easier to pass on the burden as compared to B2C, given the current political scenario plus the EV threat and other things. So, if your industrials are concerned, you just need to see how the naphtha prices are moving. So, Gujarat Gas, we are not negative, but IGL and
Okay.
MGL are negative.
All right, we'll leave it there. Thank you very much for joining us. Good conversation as always, and speak again soon.